talking all things gold and mining, and in particular, a company called GoldMining. And we're talking about the opportunities in this space with Amir Adnani, chairman of the company. Amir is back to give us an update on the new developments that he has, very exciting projects you've launched, and in particular, we're going to start with a new company. Well, can I call it a new company? Gold Royalty. It used to be a subdivision, now it's its own entity, right? Tell us about that.
Absolutely, yeah. We about a year ago, actually it wasn't a year ago, it was 9 months ago. Just shows you how quickly we've executed on this. We announced the creation of Gold Royalty Corp, and at the time, as you point out, it was a subsidiary of GoldMining. It was an opportunity to really enter the royalty space and create a new vehicle, a new form of value to expose our shareholders to, which was really deriving off of this very large resource portfolio that we've assembled at GoldMining. And last week, the company's completed a successful IPO, went to market looking to raise $30 million. A tremendous investor appetite and interest, where we increased it to $90 million. And David, today it's a brand new company called Gold Royalty Corp, ticker symbol GROY on the GROY on the NYSE American. And at a $200 million market cap, we own at GoldMining 49% of it. So it's an exciting outcome for us, because now we can grab that 49% equity stake and basically reflect that value on our balance sheet. We can take those shares, their equity that we have, where it's on our balance sheet, and the value in Canadian dollars, it's $120 million Canadian value that we've crystallized here. That's practically half of the entire market cap of GoldMining.
Wow. So I think investors, well, I've actually received a few questions from viewers who are shareholders of GoldMining. The question is why? Why are you doing this, Amir? GoldMining was fine as it is. Why branch out into royalty now? You're competing with a lot of established companies already.
Well, first of all, we're not necessarily branching off. Our main business remains the ownership and the plans to advance our projects in the 5 different countries in the Americas. We're in US, Canada, Colombia, Peru, Brazil. We're going to continue looking for accretive acquisition opportunities. We're going to advance the project portfolio we have right now to unlock more value. That's our main business. That hasn't changed, and we're not branching off. Mm-hmm. But if we can take a very small percentage of, and we're talking 0.5 to 2% royalty, a very small percentage of revenues in the future from the assets we still own 100%. And today, instead of waiting for the future, today, crystallize, as I mentioned, $120 million of new value that didn't exist before, but reflect that today on our balance sheet. David, it'd be like you and I waking up one day and we now all of a sudden have a new, in your brokerage account, all of a sudden you have holdings that have value that you can see, you can feel as mark to market that didn't exist before. That's exciting, and that's what we've done for the company. So I don't think it's at all a distraction. I think it's additive. And to be clear, we brought in a new management team, a completely separate management team for Gold Royalty, headed up by David Garofalo, the former CEO of Gold Corp, to further ensure that this was not going to become a distraction for GoldMining, and that it would very much have, Gold Royalty would have a team that came from the best background possible, the strongest track record in the gold sector possible, having built gold mines, having done record M&A transactions. The people like, individuals like Ian Telfer, who's regarded as the father of the streaming transaction, put the best team possible. And not only does that create a very strong team at Gold Royalty, but it's also a tremendous vote of confidence for GoldMining and its assets, because these individuals are building this new company, Gold Royalty, off of our sponsorship with providing the initial portfolio to launch the company with.
Perfect. I'm going to read part of your shareholders letter that came out on Thursday, and I'd like to ask you about your long-term plan. It's a good segue, ties into this. So you said, since going public a decade ago, we entered the first phase of gold mining strategy. And then now you're talking about the second phase. So in 2020, we embarked on the second phase of our strategic plan with a view to unlock the intrinsic value from our vast project portfolio. Tell us about the overall mission of the company and why you've decided to break out the timeline in phases. What are these phases, Amir?
It's very important. The phases have to do really with the bear market and bull market environments that we have seen and lived through for precious metals, for gold over the last 12, 13 years. And when you look at the launch of our company, we launched with a mandate, with a focus to go acquire resource stage gold projects where a prior company, a prior owner had already spent time, money, energy to define resources. And we saw an environment when gold was at $1,200 an ounce, $1,100 an ounce. We're talking 2015 or 2013. You could buy these projects for less than their discovery costs, for less than their replacement value. This was an environment to acquire resources in the ground for 10 cents on the dollar. With gold at $1,700 an ounce, having been as high as $2,100 an ounce last year, that window's gone. The opportunity to buy at opportune prices because of the stress in our sector, that window's closed. And we took maximum advantage of it, right? Acquiring over 30 million ounces of gold equivalent resources. That is one of the largest portfolios amongst any pre-production company. So we recognize that we're in a new phase. We're in this bull market environment now for gold and copper. And our job now is to really bring out that intrinsic value of this large resource base of over 31 million ounces of gold. Our job now is to get the maximum value out of that reflected in our market value. And that's sort of the phase one, phase two that I talk about in the shareholder letter today.
Fantastic. And now we're in the second phase. Okay, I'd like to ask you about the actual share structure. So let's say if I were a shareholder of GoldMining already, am I now also a shareholder of Gold Royalty by default? How does that work?
It's indirect ownership, right? And we talk about that in the letter. So again, to recap, we started out with Gold Royalty being a subsidiary of GoldMining.
Yes.
We then went through, when you conduct an IPO, you're basically offering shares in that company to new investors. Mm-hmm. By doing so, new investors are joining this business, providing their capital. And frankly, this is not a time really as well for GoldMining to, let's say, sell all the shares and go on. We're showing commitment to this business. We believe that the team that's been assembled, led by David Garofalo and the individuals I mentioned, and this $90 million in the bank now, this treasury, this is the strongest treasury amongst royalty companies that are peers of Gold Royalty. Mm-hmm. So we think there's actually a very substantial business case here in Gold Royalty. And we own at GoldMining 20 million shares of Gold Royalty, representing 49% of the company.
Right.
That 49% stake currently is valued at around approximately 120 million Canadian, as I mentioned. And when GoldMining owns that, that is indirect ownership for all GoldMining shareholders. Okay. It is at the end of the day, any company you own, you in terms of shares, you own a piece of its assets, you own a piece of its balance sheet, you own a piece of the cash in the bank account, and the stock it has in its brokerage account, right? So it couldn't be a more meaningful exposure, David, because there is no other 49% shareholder of Gold Royalty. We are by far the largest shareholder. And so any success of Gold Royalty in the future, we will have direct exposure to.
Okay, and just to be clear, if I were already an existing shareholder of GoldMining, my shares aren't being diluted by this process, right? There's no dilution going on here?
Exactly. So you think about it, when a company raises capital, if we had gone out there and raised $100 million of capital.
Yeah, my shares will be diluted, yes.
Exactly. We'd be issuing stock at some price to receive that capital or to add value to the balance sheet. And here what's happened is that we've crystallized value at the balance sheet level, yet we haven't issued any stock, we haven't issued any new shares of GoldMining to realize that. And instead that dilution took place at the Gold Royalty level, but that was necessary so that Gold Royalty could now have a balance sheet as a royalty company, as a new royalty company, to go out there and build a business. So really, when you think about it, I think it's a structure that really was meant to create this new exposure for GoldMining shareholders without diluting GoldMining shareholders.
Perfect. I'm going to go back.
Of which I'm the, as you know, as the founder of the company, I'm the largest individual shareholder of the company. So I think you also need to see that alignment, right? That alignment is there when you look at the management team of the company, how well aligned they are with, and the decisions they make with the equity holders.
Okay, I'm going to go back to your shareholders letter. It says, moving forward, we remain focused on identifying accretion acquisition opportunities, evaluating joint ventures with potential industry partners, and increasing our efforts to daylight value from our project. I'm not going to ask you who your potential acquisition partners are, but just to give us a framework here, what kinds of strategies are you looking for? What kinds of partnerships are you looking for? What jurisdictions, what spaces? Give us a rundown of your summary, so to speak.
Well, when it comes to any new acquisition opportunities, we have to be realistic. Again, we're in a much tighter market, stronger market for gold and copper. So while we do still come across opportunities and our team does evaluate opportunities, it won't be as much of a driver of our business as it was over the last 9 or 10 years. But I have to say, even right now, there are some interesting and accretive acquisition opportunities. And as part of our ongoing business, we will always look at that. There might be things that we could do there. But furthermore, coming back to your question about partnerships, joint ventures, it really is going to be on a case-by-case basis. When you look at Brazil, for example, we're in northeastern Brazil. There are a handful of companies building mines, operating mines, looking to get into that corner of Brazil for mine development. Our partnerships will be created on a case-by-case basis in every geography we're in. Central Colombia, Alaska or Idaho in the United States, Canada's Northwest Territories, where we have the very high-grade Yellowknife Gold Project. There are different interested parties in today's bull market environment for gold and copper for this portfolio of gold and copper resources that we have, right? And so ultimately, we're going to look to see the same way we did with Gold Royalty, right? Try to minimize dilution to GoldMining shareholder, leverage partnerships, other companies' expertise and balance sheets to reduce the burden on GoldMining in terms of capital commitment and advance and unlock value that way. I think when you look at also, David, the team and the new addition of Alistair Still as our Chief Development Officer, who joined us from Newmont, and his track record in building mines, operating mines, conducting M&A, we're also getting the team to the point to make sure the skill set is completely there for the gold sector to execute on this new objective of unlocking value for gold mining.
Tell us about this M&A strategy and partnership strategy. Is this macro driven? Is it because gold prices are high historically speaking? I mean, I know it's still a bit softer compared to last summer, but $1,700 is still a pretty good level. Is this driven by price or is this driven by company strategy, bottom up metrics only?
I think it's driven by the macro environment where producers are starved for resources and reserves. They need to deplete, they got depleted pipelines and they got to replenish them. And there is more capital available for companies that want to go out there and build mines. And what there's a shortage of is what we have a lot of. There's a shortage of resources in the ground. And it takes too long to go from grassroots exploration to resources. Whereas if you're at resource stage, you're not conducting engineering studies and permitting, so you've moved the timeline up. So ultimately, it really is, I think the key driver here is the fact that we're experiencing an environment where we're, again, in a new bull market for precious metals, for copper. 1,700 is a very workable number. Again, I'm used to the idea that we were buying projects when gold was at 1,100, 1,200. So 1,700 is an environment where you can develop projects. Our projects make way more sense at $1,700 gold than at $1,200 gold, frankly. And so this, again, with the backdrop of the producers being hungry for resources and reserves, is the reason, is the compelling driver of our attitude towards saying, let's go partner up, let's go find deals, let's do joint ventures, let's sell assets if we see an optimum transaction for gold mining to realize, because we're in the driver's seat. We have what the industry is short of, and that's ounces of gold in the ground, resources in the ground, in stable mining jurisdictions.
Amir, I have a question about how production works. So suppose I was a senior miner. I know that as a deposit nears depletion, it becomes more and more expensive to mine per ounce. Your all-in sustaining costs go down as you have less reserves in the ground. At that point, is it cheaper to just forgo that mine and buy another mine, or would you still mine it to zero?
The ideal thing is to find resources around that existing infrastructure and really be able to extend the leverage you have with existing operating infrastructure and continue mining. Okay. And so that's why we're quite keen anytime we see other operators get mines up and running around the projects that we're active in, because ultimately you're going to have a motivated buyer for your resources, because it's a tremendous amount of upfront capital in mining to put in the initial infrastructure to start a mining operation. And so I think the lowest hanging fruit for any mining company is to extend the mine life of existing assets and operations and infrastructure. And sometimes once you deplete the initial deposit that you start out with, you look for potential feed, potential sources and resources around or within some kind of distance that, let's say, makes physical sense to continue to still take advantage of what you have in place in terms of assets and infrastructure.
So is this where the world is headed now, Amir? Are we, and I know you've talked to me about this, about the world seeing fewer reserves, dwindling reserves. Is the world headed to a place where we need acquisitions and mergers to survive instead of going out to explore greenfield exploration projects?
I think you need both, because the timelines are incredibly long when we talk about grassroots exploration before you have a discovery, until discovery is made and then you establish resources. We're talking a decade long at best, okay? And so ultimately, there does need to be a new generation, a new investment phase of really going into all aspects of replacing these pipelines that have just not been replenished for over a decade of resources and reserves. So ultimately, it has to start with taking advantage of low-hanging fruits, which are projects and deposits that have established resources, but also not giving up on grassroots exploration, because once you deplete the resources, right, and you advance those, they need to be replaced as well. And that's the nature of mining. Mining industry is a depleting industry, and as every time you deplete an ore body, you die a little bit, and in terms of your future ability to mine and generate revenue, and so that constant investment in rebuilding the pipeline for future mining operations, it is paramount.
So final question for you now. Let's say I were not an existing shareholder of GoldMining. I'm interested in investing. GoldMining or Gold Royalty, what are the advantages of investing in either one? What should I be looking for? How can they help me differently?
Very different, but very easy to understand. Gold Royalty is, as the name says it's focused on royalties in the gold sector. Couldn't be any easier. And the royalty business is, it takes a balance sheet to be in the royalty business. You can't enter the royalty business with $5 or $10 million. The royalty business is about providing capital as an alternative to debt or equity to companies that basically have bona fide projects. Look at the deal that Gold Royalty just announced the other day. They're acquiring a 1.2% NSR on a project that is going to be, there's a construction decision on it later this year, operated by a proven developer and miner. And if with this acquisition, the company is going to have cash flow potentially as early as next year. That's what the royalty model does. And the advantage of Gold Royalty is that it completed a very significant IPO, $90 million in a soft gold environment. And now it has the strongest balance sheet of any junior royalty company. So any royalty company with, let's say, a less than $300 million market cap, Gold Royalty stands out as having more available capital than any other of its peers. That to me is a very important reason, coupled with the fact that you have a world-class team. You have individuals that used to run major gold companies before, like Goldcorp, with David Garofalo, Ian Telfer, and John Griffith, who joined the company from Bank of America, where he ran their metals and investment mining practice. That's a royalty investment. Gold mining offers today a very compelling value proposition when it comes to value of resource in the ground that we control, and we control over 30 million ounces of gold equivalent resources. It is the lowest valuation amongst any TSX listed company. And you have the 49% equity stake in Gold Royalty. So if you're unsure about the royalty sector, GoldMining, I think, is the only company today that offers significant exposure to the royalty sector via our 49% stake in Gold Royalty, which again is a significant value of $120 million to us, but ownership of assets in 5 countries in the Americas that are now, because of our decision to really move these projects forward, look for partnerships, look for opportunities to daylight value, is going to be a company with exciting news flow cycle and activity on multiple fronts, right? You don't have all your eggs in one basket with gold mining. You've got a very diversified portfolio and really unique blend of holdings, the assets that we own 100% and the significant equity stake in Gold Royalty.
One final question. I said final question last time. I have something to follow up on. You
It's
give me
your show.
interesting
It's
things
your
to
show.
talk
You
about.
can ask as many questions as you want.
So one risk that investors might have is because you have an ownership, GoldMining has an ownership in Gold Royalty. Suppose that company does not perform well. Are you not bringing downside risk to an existing company? Why would I be exposed to more risk? Can you answer that?
The business of being a royalty company inherently is actually less risky than being a mining company. This is one of the reasons the royalty companies are trading at better multiples. This is why a lot of generalist investors are assigning 2 to 3 times net asset value multiples on royalty companies than on the developers and operators. These royalty companies get to simply live off of top line revenue, right? And they don't share in the operating risk. They're not taking on the risk associated with political risk, permitting risk, and they don't have any capital requirements when it comes to the ongoing sustaining capital or even the initial capital to build the mine. And there's that embedded optionality in a royalty company, the embedded optionality in the commodity price, exploration upside, and all of those things make the royalty model quite attractive to investors. And again, hence why we really wanted to create this exposure for our GoldMining shareholders as well. We see more upside in it than downside. And we think the fact that the company is starting life with such a strong balance sheet after this IPO with the 90 million in cash further reduces that risk that you're asking about as well. And so at the end of the day, as you can appreciate, we're not in the business of completely eliminating risk. It's about managing our risk, reducing it, and how we position. And I think we're well positioned here with both companies.
All right, Amir. Well, thank you so much for giving us your updates. Best of luck with both companies now and UEC. I know you've got your hands full. You're like the Elon Musk of mining. You've got everything.
Thanks, I really appreciate it, and I really enjoyed these conversations with you. You just you drove me with these questions, but all good.
That's what the viewers want to hear, man. That's what the viewers want. Amir, I really appreciate you coming on the show. I look forward to working with you again. Thank you.
Thank you, David. My pleasure.
And thank you for watching Kitco News. I'm David Lin.